Coming to you live from downtown Detroit, this is Benzinga's PreMarket Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day. Good morning, all you traders and investors out there. Welcome to this Thursday edition of Benzinga's Pre-Market Prep, brought to you by Thinkorswim. I'm Spencer Israel, as always, here with Joel Elconin and Dennis Dick, and they're both pretty busy this morning because we are moving after that ECB number that just came out. So we're going to talk about that and what it's doing to the financials and the commodities. We've got a few earnings still coming in. Costco, Lulu, so I think a few other ones. I think Sears today as well. So a few earnings to discuss and a lot of movers this morning. And then at 8:35, we're chatting with Tobias Carlisle. He is a partner at Carbon Beach Asset Management. We're going to talk about how he finds his deep value trades. But before we do that, Joel, tell us about how we're doing in the S&Ps.
Well, temporarily they were in the red a little bit on ECB information. We dipped to 32.50, and man, that lasted about a New York minute. Back up at 38.50. Yesterday's high, all-time high, 22.41 and a quarter. Keep in mind, folks, there's going to be some trading going on between the December contract and also the March contract as we do the rollover 6 days ahead of the actual expiration. Crude dipped under 50, not by much, 49.61 back up, and silver was real strong yesterday. Gold was a laggard, but both down today. Dennis, pretty good trading action here just after the 8 or before and after the 8 o'clock hour.
Yeah, 7:45 ECB came out. Spencer, give us the details what the ECB said, because I'll tell you, financials took off on that number. We were trading up slightly on the banks, and we are now up significantly on the banks. So you come and you can see us down here. Financials not down. Financials strong once again. Bank of America up over 1.2%. Goldman Sachs trade up almost $2. I saw JP Morgan at one time tick up over $1. It's up 50 cents still here right now. What did the ECB say that drove this financials up even higher?
They're going to continue asset purchases at its current pace until the end of March 2017. They're leaving interest rates on hold, but they're continuing QE. QE is what it says.
More QE for Europe. And if you're looking here, that, on the initial number, they actually hit the S&Ps. They hit a little bit of the bank stocks as well, but then they came in with their buy-in shoes on. The S&Ps are now trading where they were prior to the number. Although we have slipped a little bit here. We're trading down about 4 handles, but the banks, man, there is a bid in the banks. Deutsche Bank, I guess you just can't short this thing. I tried shorting it last night again, and it's just trading up here another 90 cents. It's up another 5%. Incredible movement. I'm telling you, man. This Deutsche Bank is a monster.
All right. Well, maybe rates are going up here, but certainly not in Europe. 1958, trading at the highs of the pre-market session in Deutsche Bank. We're not the primary market in that. We all know that. So you are trading against the arbitrageurs. If you're looking for a number, $20. Deutsche Bank hasn't been up near that $20 level since April. Could be a psychological resistance level. I was just looking. Bank America ready to challenge another whole number here. Oh, my Lord. 22.57 is where we went out. 22.82 is where it's trading. Oh, I wish I could have held more of those 21 calls, but, that's what happens. Always, Dennis, always remember the smallest part of your position is always the most profitable, and that's what you hold to the end. Bank America has.
What about when you're short?
Oh, even I'm not shorting this market, Dennis.
This market is, well, it's tough to short. I mean, we get hit right there on the more QE, which is surprising in itself. Then we rally right back. I mean, like, what was the quote you said of the pre-market show? And you look here, well, okay, I'm going to just start picking up the stuff that hasn't went yet. And you're starting to, comb the ditches, as we say. And they were buying everything.
Yeah, what's also very interesting, I think we talked about this a couple days ago, a couple weeks ago, when you make a new all-time high, right? If you make it by a tick or so, it's really not a big deal. but we made a new all-time high in the S&Ps yesterday by almost 30 handles. The former high in the December contract was 22.1375. We got to 22.41 and a quarter. I mean, it's just not, it's just not incremental new highs. And I'm trying to think of where. I think going back, have to look here again at the daily charts. But we had another similar day after that. I think it was after the election. When you take a new all-time high up like that, I mean, that's really unprecedented to go almost 30 handles above the former all-time high.
A little volume hiccup. You just have to hit refresh. Obviously, you can't hear me probably if for me saying that. So Spencer, I don't know what's going on. Get the gremlins out of there. We've got too much stuff to talk about to have no volume. So let's jump in here to the earnings parade. There was a big one last night. Lululemon, ALU, trade up a cool 15% here this morning. This is blowing through all the 60s. It's trying to get to 70 here this morning, Joel. ALU. Spencer, what'd they have to say?
Q3 EPS 50 cents versus 43. Sales 544.4 million versus 540.3. So beat on the top, beat on the bottom. Q3 adjusted EPS was actually 47 cents versus 43 cents. $100 million share buyback. The guidance was okay, not great, but comps were up 4%. So.
Wow. Oh boy! Trading at the highs of the pre-market session.
It goes back to a rule: you can't short stocks.
Yeah, I mean, what can we say? I mean, I'm not even going to say, Dennis. I think I'll bet we'll close above 70. Out.
You're going to go with the blowout?
Out on that.
He's pulling it. That was a high frequency bid there. You pulled it too fast before I could hit it. I was sitting out there and it was too far the time delay. You're high frequency bidding me now, Joel.
69.75, maybe a psychological level. Like 70 might be some resistance. Looking at the daily charts, last earnings quarter they really hit it and just went down quite a bit. Let me give you some daily highs here. 68.84, we exceeded that. That was your September 6th high. And then if you really want a juicy target, 71.65. That was your high in September 2nd. And then you got a gap up to 75.12. Nothing but air up here. But once again, if you have any of these weekly options or any of these shorter term plays, I don't even know what the straddles or what the implied price movement was, but this exceeds it. So congratulations. Nice setup on the dailies. Too bad you don't get to trade this thing. Long consolidation really between 55 and 60, and then busted out off the earnings report.
$11 though. Like, I know it's a good quarter, but holy cow, man. It's starting to become the whole Greenspan quote, irrational exuberance and so much stuff. And I don't know. It's hard to fight the tape because it just keeps on going. But when you're talking, I guess it's up $9, but wow, when you're talking a stock up 15% on the earnings report, a stock that really wasn't even in favor 3-4 days ago. I mean, you're talking about a stock that was sitting near its 52-week lows, and all of a sudden they're going to buy it hand over fist here, Joel. I don't know. This is just... This market is just so long in the tooth, and going back to the financials, and just saying, how far we've come here. Bank of America was $16, now it's 22.5. 1 month later, after Trump officially announced, J.P. Morgan from 70.84. I mean, we keep talking every time we come in, every day they seem to be up another dollar, another 2-3%. Deutsche Bank too, obviously incredible, but you know what? And I love Kramer. I will say it right now, Kramer. He knows a lot. He knows his stuff. The amount of information that is in that guy's head is absolutely incredible. I mean, he's, CNBC. Kramer is awesome. But, sometimes, things happen, and last night I'm watching Mad Money, and he's got the Trump button. And it's every time the caller calls in, it says Trump stock or not a Trump stock. Trump stock, not a Trump stock. And all he wants is Trump stocks, and no, not a Trump stock. Apparently, David Faber told him to put this button in. That's what Kramer said. Came from David Faber. And David Faber's been, I don't know. So, anyways, now you got this Trump stock button. We run 30% here on some of these banks. Now you're putting in the Trump stock button. It kind of feels like it could be a top to me. I don't know. But I've been trying to call it top forever. Can Mad Money's Trump button call the top?
That's an article. That's an article here for Benzinga.
I love Jim Cramer, but this is late to the party, this Trump stock button. After a 30% run, now we're going to start buying these Trump stocks? Like, Cramer's been all over it. He's been pumping these. But now that you got the actual official button, I don't know. It feels late to the party.
Have you ever heard my irrational exuberance story? Have I ever
With
told it?
Greenspan?
Well, he said that when I was working and trading on the oldie desk, and the market was in a similar phase, and I kept saying, every time we had a crazy rally, I'd say this is irrational exuberance, and there was one guy on the desk that was new, and somehow someone was having a conversation, and he thought that I made up the saying. He and he John was his
Right.
first name. I wish if there's any
It's
oldie
incredible.
guys out there listening, maybe you can remember his name. But yeah, for the longest time, he's like, no, Greenspan didn't say that. Joel's been saying that forever. So irrational exuberance to
That
describe
was
it.
the famous. I think it was like 1998, wasn't it? When was the date on the
I thought it
irrational
was
exuberance?
99.
Was it
Yeah,
99? I
origin
feel
of
like
the.
it was 98 or 90. He was early to the party because it went up for another year afterwards. But he was right. He was talking about the tech bubble and he was talking about how everybody had to. We bought the S&P up to a multiple. I think we were trading up in like the higher 30s or even a 40 on a P multiple. It got absolutely insane. So, anyways, Greenspan comes out and calls the market irrational exuberance. Take that day, but then it came back and we remained in irrational exuberance for another year before the tech bubble crash. I think we're a little bit early to say that. And, when you look at a multiple S&P's trading at 20 times, it's not as ridiculous as it was back in the tech bubble. But just saying, usually there's a pullback. Usually, there's some profit taking here. It's like every single person just wants to be in these bank stocks here now, and I don't know. Everybody hated them 6 months ago, so it's unbelievable how Trump coming in. They think like I said, we're going to go back to the wild west of banking here, and I just don't know if that's the case. So, in any regard here, I'm not chasing any of these bank stocks. I don't own any bank stocks. I've got a couple, my investment portfolio, but for the most part, I'm very light in financials. I've sold whatever other financials. Sold a little bit too early, obviously, because continuing to run here. But I just feel like eventually these things are going to crash and burn. I just don't know from where.
I can't remember. I bought a regional bank ETF. I can't remember. I mean, this is like I don't know, a year ago or so. What do you know what the regional bank ETF is, Dennis? Is it
A couple of them. There's like KRE.
Yeah, yeah,
KRE
yeah,
is one of the
yeah.
more popular ones.
Oh, I better not look at that chart. Look at that.
Oh, straight.
All
The
right.
banks have been absolutely incredible. I don't think you've seen a move like this. I don't know even when.
Ever.
Like, I don't remember Bank America going up 30% a month on no individual company news. I don't remember that. I
Yeah.
mean, we're going to get the Fed decision here coming up. We're going to get interest rates going higher, at least in December here. But you got to tell, some of this got to be baked in now.
Yeah, maybe it's going to be sell the news on the rate on the rate
I
increase.
think it's coming eventually, but I just think the reason we keep flying up here, and and why we see a huge rally there yesterday, there was so many money managers, big money man. I mean, we were down when Trump came in. We were down 105 handles that night. And there was some people selling that night. And if you were selling the next morning too, when we were still down 2, 3, 400 Dow points, if you were selling, coming in saying, "Oh, thank goodness, I'm getting out, I'm getting out." If you were selling that day, what are you doing now? You're looking at this and you're saying, I got to buy stocks. I'm underweight. We're coming in here to the end of the quarter, in December, and I'm underweight all these financials. I'm underweight all the best stocks. They're coming in here and they're just buying because they need to buy them. They don't own as much, as heavy as they did before the big money managers. So that's what it is. It's a scramble. Every time these things pull back, even 20, 30 cents, like you were saying, a flat day is a down day for these things. There's money managers, crawling over each other, trying to get in there.
Yeah,
So I don't know when that turns, but maybe at the end of the year, maybe it's sooner than that. Maybe it's becomes everybody anticipates that it's going to keep going up after the Fed raises rates. Maybe it's a sell news event. Eventually, there's going to be a washout here, but man, there's so much underweight money in this.
and just got an interesting scenario. Next week you have the Fed decision, and you also have a quad witch. Before the holidays coming up, and a lot of times those expirations signal really a major continuation of a trend, which you're seeing here, or a reversal. So a lot of buying going on ahead of the quad witch, would be the third Friday of the month.
Okay, continuing on with the earnings parade here. Costco, COST. Did we get the Costco numbers? Yeah, it's trade up two. Actually, last night. Sorry,
Yeah, it was
Costco trade
yesterday.
last night.
Yeah,
What are the
Q1
numbers, Spencer?
Q1 EPS $1.24 versus $1.19. Revenue 28.1 billion versus 28.3 billion. So not bad. Q1 comps up 1%. Comps excluding impacts from charges and gas prices, and forex is up 2%. So there you go.
What
There
do
you
you think on Costco, Joel? Give us some levels.
Well, let's see. What's the all-time high in Costco? 169.59. So, no, I'm being a little sarcastic here. Pre-market high 157.12. It looks like someone is trying to take a piece off at that level. We haven't been up over 157 toward the 160 area. You got a high at 159.28. That was back in September. Maybe keep an eye on that. Another good indication when you see like something bumping up here against 157, see if that seller's still there at the open or if they get mopped up. Below 157, you got a lot of not that much air in this thing. I mean, it is trading up $3, but compared to some of these other moves, not too bad. And the dailies here, it came down hard, so you got an area of very little, trading going on, all the way up to that 160 area.
I was in a Costco yesterday or 2 day on the weekend, and it was just packed. I mean, you can't even find a parking spot. So difficult to be bearish that stock. There's just so much, even the revenue. Look, it's like 28 billion in revenue for the quarter. They sell stuff, man. So I don't know. It's tough to be bearish that stock, although it's not really an official Trump stock, as Kramer would say.
Yeah,
So a couple other ones, just quickly running through the earnings here. We had Ciena report here this morning, CIEN. That stock is trading down 60 cents in the pre-market. Ran up ahead of the report, was running up last night. Those people were wrong, obviously, because stock is traded down here. Spencer, the numbers on
Yeah,
CIEN.
Q4 EPS missed by 2 cents, 44 cents versus 46 cents. Estimate revenue is 716.2 million versus 716.5, so a slight miss there as well. They see Q4 revs at 615 million. That's a bit of a miss. 645 was the estimate. I'm sorry, 615 to 645 is the range. 634 was the estimate. So in line with the estimate there on the Q1 revenue guidance.
all
I don't
right.
know what to say on this one. It got up there last night over 22 bucks. People are just too excited, and then it's pulling back here 27. It's kind of in the middle. I mean, it's in the middle of nowhere.
Yeah, very in the middle of nowhere. Your pre-market low is 2051. You did have a low just under that level. We'll see what happens at 20 and a quarter, and then a couple lows under 20. I'd see, maybe call this 1980 to 1966 area, call it 1975, but that's still a buck away from here. I just want to give a couple congrats here. Angie Baby has been in Bank America since $5. She added it.
Nice.
She added it 14, and for the first time in years is considering selling. That's when you bought, Angie. You let me know when you sell. And then DC1, we did a lot of options talk yesterday, and if you're gonna trade those weekly options, man, try get them cheap. Maybe under a nickel or a dime, and just buy a big boatload of them because you know what your risk is. But you bought the 2250 weekly in Bank America for 4 cents. Now the intrinsic value is at 30. Boy, that's a
That was
nice.
trading at 4 cents yesterday
The
on the
20.
weekly.
Uh, it,
That's incredible. But DC, that's a nice scoop there because that is almost looks like a mispricing to me. And sometimes you can look at these options, especially that's a lottery ticket right there that you bought. But sometimes when the volatility increases suddenly, the premiums don't change quickly enough to catch up with the volatility. Bank America's went up 50 cents every day. That was a great call. If you got the 22 and a half for 4 cents, or maybe it was bought earlier than that, but if that was bought yesterday, that's absolutely incredible. I can't believe maybe it was bought a few days ago or Monday or Tuesday. So maybe it was trading down there 21 and a half or 20
yeah, there you
or
go. Yeah,
but still, buck out of the money, 4 cents, but going up 70, 80 cents a day. I like that risk reward. Great call, DC. Nice purchase there at the 22 and a half. And who knows? You have 30 cents in the money here right now. It's always nice. Sometimes, remember, you always have an option. If you don't want to sell the option, sell the stock against your option. Then you can participate in the downside too. Sometimes when I get in the money, if you were to sell it, I'm not saying no investment advice here, but just hypothetically here, if you were to sell 22.80 this morning, you'd be locking in a 30-cent gain if you sold the stock. And then if Bank of America tanked, you participate in that side too. So sometimes I like to do it that way as opposed to just selling that call outright. The only thing is obviously you have to have the capital in order
there
to
you
do
go.
that.
Yeah, the capital, and if you're broke, because if you have, 10 of those calls or 100, it's a 10,000 share position. So you got to be careful. I'm not sure exactly how your brokerage firm will, interpret that. Prop firms, a different story.
AT&T right now getting the beats here. There was comments here on the merger. I'm not sure if something was just said here, but I'm looking at AT&T right now, just falling 40 cents in the pre-market. It's a big move down for AT&T. Didn't see any company-specific news, so somebody's getting excited there. But there was, commentary with the merger with Time Warner there yesterday, so might be why you see a little bit more AT&T volatility here today. Just continuing on with the earnings parade here, we did have a couple other ones. H&R Block reported last night. HRB trading up. 24.65 is where it's trading at in the pre-market. Spencer, give us the numbers.
Sorry, Q2 EPS 67-cent loss versus 68-cent loss. Estimate sales of 131 million versus 126.9 million. So slight beat there on the sales and on the EPS.
25 and a quarter. I don't know. Does anybody do
A
that?
lot of overhead supply
Yeah,
here.
who does their taxes through H&R Block anymore? I mean, isn't it all these programs? I guess they offer some other services.
How about TurboTax, right?
Yeah, TurboTax.
A lot of competition. A lot of competition.
You got a spike to 25 and a quarter. That coincides with the level that just above your August 12th high at 24.95. You have backed off it yet. Let's see if there's something at the whole number of 25 up to 25 and a quarter. Considering this stock, traded down at 21.59 on Monday, that was your low. Nice gain here. I'd be trying to lock something in up 25 and above.
TLRD, Tailored Brands, trading up 22% here in the pre-markets. One of your big winners of the day. They reported earnings last night. Spencer, how'd Tailored Brands do?
68 cents versus 55. 846 million versus 832 million.
TLRD, $20 was your resistance point where it got up to a couple times, kept failing there. All through, if you look at the weeklies, that's been the big bogey. Blowing that away here. You come out with a good report right now. It's all about timing. Come out with these good reports when you get these big 300-point up days. And everybody wants it. TLRD trading up 22%. Wow. Joel, is there anything in here? Because this is starting into a gap area.
Dennis, I'm going to buy you a 1-year subscription to Tailored Brands. It provides a personal, convenient, one-of-kind shopping experience with compelling.
This old Men's Warehouse, right?
Oh, is that what it is?
I think so. Verification, yes.
Where's the brand?
Tailored Brands, the old Men's Warehouse.
Remember the Men's Warehouse Josie A. Banks merger when they were going back and forth?
This is their stock.
Oh, okay, all right.
And it's been ugly for a long time. I mean, this thing got down to $10 beginning of 2016. So it's been an okay 2016, but 2015 in the summer, this was $65.
And what was the name of that guy? The name of that guy they fired shortly after the merger. The guy that used to do all the promos?
Oh, no idea.
All right, nice move up $5 here. Boy, oh boy, I'll just give you the pre-market high, and then you can decide what to do when it blows through there of 24 and a quarter. You have a big, ugly bar on the monthlies here, so it's nearly impossible to determine where it's going to stop here when it went from 40 to 20 here. So maybe you could find some daily levels in between there, but, man, breaking out over 20 here. This kind of reminds me like when I look at the daily Bank America chart, and you can say, wow, this just looks horrible. This is just way too much of a rally. You look at the daily and you say, this thing's got to come.
It's a lot of air.
Yeah, but you go to the monthly here and you're saying, hey, why, what's the 50%? I probably have done 55.08 to 253, Dennis. 53-point move. Let's call it 26. 26 and 3, 28, 29, maybe 30. Maybe Bank America is going to $30.
What about Tailored Brands? That could go to 32. These two stock charts kind of look the same, don't they? A little bit. I mean, not today, obviously, but when you look at it out from the monthlies, the big collapse, and you got to change the time frames. But when you look at the Bank America and go to the monthlies, there. Topped out there way back, and back. Well, what was the high back in the financial crisis on Bank America?
Actually, that peaked out before. That peaked out in 06 at 55.08. So it had already come down by 2008. The high there was a $45 area. Stock Hunter is pointing out 26% short interest in TLRD.
Short squeeze them.
Yep.
If you're short that thing, those 26% that are short this morning are hiding under their tables, using 23% a day. That is ugly.
Yeah.
All right.
What else?
Drug stocks. We got to talk to drug stocks. We haven't talked to them yet. They got murdered yesterday in that time of the year article of Trump. He did mention about drug pricing, and that is going to be on his agenda to get drug pricing down. Not good news for the pharmaceutical companies. These things remain under pressure here. Everything yesterday, they did not participate. The biotechs did not participate. The drugs did not participate. Pfizer was trained down significantly. They did come back towards the end of the day, but Merck had a horrible day. Biogen had a horrible day. Celgene, this is a day we were up big. At one point in time, Celgene was down 7 points. So they hit the drugs hard at the open yesterday before they rallied them towards the end of the day. And I've got egg on my face on the drugs. I've been saying they've been cheap for a while here. I'm still going to say, from a long-term perspective, I like the drugs. It's a long time. Market can stay irrational a long time. But the only thing in my investment portfolio, I can stay solvent a long time because I'm not on margins. So I will wait this out in my investment portfolio there. I'm loaded with drugs. I buy more as they continue to come down here, and I think 10 years from now, I'm going to be very happy that I got these drug stocks in my portfolio.
Yeah, maybe you did get a margin call there, Dennis, on your.
That's alarms. That's upgrades and downgrades. I've got an alarm system going when something gets upgraded and downgraded.
Oh, I thought it was a
is.
ringtone, honestly. I thought someone was calling you. I was like, "Jesus."
No,
God.
those an alarm system that something just got upgraded. So I didn't look because I'm on my live radio show. Actually, with some stocks over in Europe.
All right.
I should clean that system up.
All right, CELG. The only thing about this one that looks a little enticing is the gap fill here. We had to leap up. That was probably earnings. Started to get into it yesterday, getting a little bit of a bounce. So maybe if this comes in to let's see, you had a gap between 114.70 and 109.30. So I might start getting interested in this thing if it gets back 110 and under. And isn't it funny how the perception before the election was, if Hillary gets in, it's going to be terrible for drug stocks. And now, is Trump actually following through? He's not building a wall. He's getting down on drug
Making
stock.
a lot of promises, I'll tell you that.
He's going like the opposite, though. These things were supposed to rally or supposed to get heard if Hillary was in, not Trump. So, man, a lot of complicated things going on here in the market. I noticed Merck was down yesterday.
The drugs were just beat on the open. The drugs got murdered. It was almost felt like a little bit of a washout, but who knows? These things just continue to be underperformers there. So they're out of favor, and it's a hard thing to break. When stocks are out of favor in this market, they stay out of favor for a long time.
All right. Any more earnings here? We've been jumping around.
Moving away from the earnings parade here.
What about Comerica?
Before we guessed. What do you want, Spencer? You got another earnings stock?
No, Comerica, I was going to say. Not an earnings stock, but, this was a big one yesterday. This is actually a story that we broke on Benzinger Pro at around 2:30. We had that the board is now warming to the idea of selling itself following a push for a strategic review that could include an outright sale, merger, or a high-level management change. We had that yesterday.
Comerica has been a monster. This stock has been unbelievable too, but it's a financial, so they're all moving together here. It's $50. What basically Trump got it. It's now 68.49 here. I got to go out and look at the book here because I got to think there's got to be something big at 70. Go into the book. It's early yet, 14,000 at 70, but I think it's going to grow. So I think 70 is your next bogey on this thing. It's 68.49. We only worry about 69 oddball handles now because every financial blows through those, but 70 sounds big.
70 was your high in March of 1999, and that's not even the old-time high in the issue. I will notice it is a Detroit bank, used to have a lot of headquarters, moved a lot down to Texas. A ballpark is named after it. They have been consolidating. They have been trimming branches here for quite some time, so we'll see if anything materializes in that. Big move yesterday. We will keep an eye on the high from yesterday. You haven't cleared that, 68.68. And went off the board at 68.35.
Quick look at imbalances. A few sell imbalances in the financials. They've come back in a little bit from the highs, but that being said, they seem to just find buyers anyway. So hard to be bearish the financials when they go up every day. Twitter, 59,000 to buy. Want to talk about Twitter. Is this a Trump stock? I think it is.
Let me hit my
he
button.
Talks about Twitter.
Oh, yep.
He tweets, he moves. People are interested in Twitter just to hear what Trump has to say. And look at the move there in Twitter yesterday. Went from the low 18 a quarter straight up $1.25. Twitter's back. It doesn't. You got the columnist, Joel. You're saying it doesn't even need a takeover. It's going to go up on its own merits, and that's exactly what's happening right now.
And this one, I still have, some of the January 20 calls one. Those are Dennis. I don't worry about it all. Had those for a while, kind of been trading in and out of them. Yesterday, though, and I've been keeping an eye. This one had 14 days of a little over a dollar range. Now, you know when that happens, you know that there's going to be a big move coming one way or another. I also think, and maybe Spencer, you can weigh in on this. Maybe that the SoftBank investment in the U.S. I don't see anything directly related to them in Twitter, but that seemed to get things kick-started a little bit. And we've been talking about this for a while, Dennis. You know it's going to go fill these gaps up here. You know it's going to go back up to $24. I don't know when, but you just
You
got
don't
to
know anything,
you
but
got to. It's going to clean up that chart. I'm telling you, we're almost. We had two
you could
gap
write an
down
article
days.
on that too. Clean up the chart. I like that.
You have to. I mean, your first
You
bogey,
have to.
you have to. Gaps don't stay forever. Your first bogey to fill. This is when David Faber had all this stuff going on. The first gap to fill is up to 1965, and then there's a huge gap between 21 and 24. So Twitter climbing back on its own merit, just not takeover speculation.
Just other imbalances. Alibaba small, only 9,600 buy, but I just want to mention it because it is trading up 60 cents here in the pre-market. It was trading up last night too, so kind of bucking the trend. But interesting chart. I mean, there is a
Very.
buyer here at the 90 area.
Yep.
You got 3, 4 lows just below 90 bucks. Seems like every time it gets below 90, he finds buyers here again. Kind of hanging on a cliff. So if I was playing it that way and saying this buyer is eventually going to push the price higher, I think if it takes out that low of the move, which was from December the 1st, 89.18, I think that'd be my bogey. So I rounded down to 89 and I maybe put my stop there if I was trading it from that side. But I don't know. There seems to be some type of buying or buyer there, at least around 90.
Yeah, and a clear breakout over 92. A lot of air up to 94. Let's see here. Dr. J's bringing up a good point and kind of harped on this one yesterday. About 165, remember, in IBM. Let's just go to the daily shows some resistance here, but the monthly chart, that 165, look at that, Dennis. Holy macro. Look how many times. It's 5 times in the last 6 months we've topped out between 163 and 165. Dennis, can we get you interested in. You got some IBM, though, right? Or did you sell it?
No, I sold it.
You sold it?
Yeah, I've sold. I had my invest portfolio and I did sell it. I don't know. I don't mind it, but at the same time, I just started reanalyzing. I thought they were doing all their stock buybacks at the wrong time, and I don't know. I reanalyzed and I don't have it in my invest portfolio anymore.
All right. Wait, Dr. J had some calls and he closed them out yesterday. I hope he did it as close to that 165 level because you did get to 165.18 and that buying frenzy was up over $4. Let's see if we can get some closes above 165. But way to use your monthly charts there, Dr. J. All right, 8:34. We're going to take our first and only break of the day, and we're going to talk deep value with Tobias Carlisle. He's a partner at Carbon Beach Asset Management. We'll be right back with Tobias.
Whether you're a short-term swing trader or a long-term investor, you need to check out Thinkorswim, brought to you by TD Ameritrade. There's a reason why Thinkorswim has been named the #1 trading platform, because it has it all. With Thinkorswim, you can trade stocks, options, futures, forex, and virtually every other type of order. Get notifications on mobile devices and interact with other traders in chat rooms. You can also use technical indicators and see the latest investing and trading education in Think Money magazine. If you want to keep up with the markets, you need Thinkorswim. To experience everything Thinkorswim has to offer, open a TD Ameritrade account today. Thinkorswim, the online trading platform for traders and investors. TD Ameritrade, member SIPC. All investing involves risks.
Welcome back, traders and investors, to Benzinga's Pre-Market Prep, brought to you by Benzinga Pro. I'm your co-host, Joel Elconin, along with Spencer Israel and Dennis Dick, and we have Tobias Carlisle on the line. He's a partner at Carbon Beach Asset Management, looking for deep value in this market. Tobias, how you doing today?
Good morning. Doing very well.
Thanks for coming on the show. So, deep value investment strategy. Why don't you just walk it through us a little bit? What are your scenarios for picking out the deep value stocks that you want to invest in?
So everybody knows what value investing is. That's trying to buy something at a big discount to intrinsic value. There are different definitions of value. You could find a franchise Buffett-style guy who wants growth, high returns, and invested capital. At the other end of the scale is us, which is deep value. We're looking for cash-rich balance sheet, business that might look like it's in some trouble, but could recover given enough time. And we're looking for that improvement in fundamentals and a big discount to valuation. We're trying to capture both when we invest. And in addition to that, we'll use options, and we try to find these what we call asymmetric positions where there's a hard catalyst, a takeover or a spin-off or something like that, where we can realize the return in a known period of time.
So, do you create your own deep value models, or do you go with the traditional PEs, book value, things like that? Have you developed your own criteria?
I have. I wrote a book, Deep Value, that came out in 2014 that described the process, and it built on some work in quantitative value, which came out in 2012. I favor a metric called the acquirer's multiple, which is the one used by takeover artists and LBO guys to find exactly what I was describing before: cash-rich balance sheet, strong operating earnings in relation to the residue of the company that you're paying for.
And what are your criteria? I mean, are you going after some of these bigger companies, smaller companies? Do you have a range in market cap that you like to keep it within?
We're agnostic, but just for the purposes of investing, it needs to be more than $200 million. The tendency is that the opportunities are towards that lower end, but we can put some very big opportunities on. And this year, our biggest holding has been a $36 billion company, which is Humana.
Okay, all right. And are you still holding that one? I mean, there's been rumors on again, off again with Humana. Could you discuss what your criteria is for Humana?
So we do still hold it. At the start of this year, around February or March, we didn't have a holding in it, but we initiated after the Treasury blocked the tax inversions. You remember that?
Oh yeah.
Earlier this year, the companies were trying to get out of the US for tax purposes. When that happened, all of these merger ARBs blew apart, either in sympathy or because the ARBs who were actually holding the positions had to sort of disgorge them. So we went through all of them, and we found the ones that weren't subject to a tax inversion. And so Humana wasn't. It's being acquired by Aetna, which is a US-based company. So we put that position on. We put a few others on.
All right. I mean, yeah. Do you use technical analysis at all? Like I see this like 2/19/79. That was the euphoria when the deal was going on, and now I'm just looking, and obviously they're rallying that now here, but right back up to that level. How much emphasis do you put on technical analysis?
So we don't use it to select our longs. We're pure value guys on our longs, but we might use technical analysis when we're trying to work out whether we hedge the portfolio or not. We just use a simple moving average to determine when we put a hedge on.
Do you put a hedge on just in the individual stock that you're participating in, or will you use the futures, the spider? How do you put your hedges on?
We do it for the entire portfolio, and we can either use the futures or we can use the SPY ETF. We just short the SPY ETF against the portfolio. It's really the simplest way of doing it, and I think it minimizes the brain damage. We're long guys for the most part, or we're arbitrage guys for the most part, but we do get a little bit concerned when the market's as expensive as it is.
Right, so you have a little bit of a hedge on. You also mentioned that you kind of like to follow the activist. Tell us, some of the activists that you like to follow, and maybe some of your recent play based on activist activity.
So I follow Starboard, I follow Value Act. I think a lot of people will follow those guys because they're great activists. We don't necessarily follow them blindly. We're always going to look at each position and make sure that it makes sense for us. And so I'm happy to follow an unknown activist into a position if we really like the position and the story that they're telling is a good one. And so a good example of that is early this year, Engaged Capital, who's not a group that I know particularly well, but they're based out in Newport Beach, California, which is near us. They've been lobbying a company called Benchmark Electronics, tickers BHE. We put the position on in BHE because we liked what they were saying. We thought BHE was very cheap. And I think we're putting it on low 20s and it's traded up into the high 20s now. So that's worked out well for us.
And what stock was that?
Benchmark Electronics, the ticker's BHE.
BHE. Okay, so, man, I mean, after this Trump rally, everything in the market, I mean, is it getting to be slim pickings out there? Is there any sectors? I mean, the drug stocks have gotten hit on Trump, the Trump victory, which is not expected. Where are you looking for value now in the market?
Yeah, so Trump went in to drain the swamp and he's drained our opportunity set. He's drained our screen of opportunities. That's a good thing because the portfolio's rallied really hard. But the things that we're looking for, there are fewer of them than there were, but there are still some interesting things out there. One thing that we've held all year long that continues to be really cheap, I think, is a thing called Greenbrier, GBX. They make rail cars and that sort of thing, which everybody hates, but they're going to benefit from any sort of upswing in coal and other things like that.
Okay, all right. So that's an interesting sector to look at as well. You guys are always on the long side then, right? No shorting, no overvalued in the deep value. It's basically a long portfolio.
It's basically a long portfolio unless there's unless it's an arbitrage, in which case we might short so in the merger arb we might short the acquirer, but we didn't in the Aetna Humana thing because we thought Aetna was cheap too.
Okay. There's another deal out there. Now I know this might be a little bit of too big for companies, but the AT&T Time Warner merger here, trading at a substantial discount here. AT&T's been moving around here. If you're not in it, I mean, you see regulatory problems for this, or because I believe the takeout price is up at 102, isn't it? So it's trading at a pretty steep discount. How are you evaluating this deal?
So our criteria is always that the position that we're putting on is undervalued. That's the first thing we look at. And so we're not entirely sure that there's enough undervaluation there. We want acquirers who are disciplined, and so the acquirers who are buying the same things that we would buy because they're undervalued, in addition to having some strategic reason for doing that. So it's just something that it's not in the portfolio. We're not looking really hard at it because we don't think it's cheap enough.
All right, we've been on the line here with Tobias Carlisle. He's a deep value investor. He's partner at Carbon Beach Asset Management, giving us a peek into his strategies. Thanks a lot, Tobias. We'll talk to you again soon.
Pleasure. Thanks, guys. Always good to be on.
All right, thank you. All right, moving on here. I think Dennis is still pounding out the keyboard.
I'm back.
You're back here.
I had to clean up some trades, so I got a billion trades on here this morning. So trying to trade things. There is, besides my sickness, which never goes away, there is so much volatility here in the financials. I mean, Deutsche Bank, I just watched it go from 1958, when we started the show, all the way down to it got down to 1890. It's back at 1924. These financials are bouncing all over the place right now, especially the European ones. They have been all over. So obviously, it's off this, Draghi statement there with the more QE, but wow, there's so much volatility there. I mean, overall market, it seems a little bit more muted, but in the financials, there is a lot of volatility.
Do you think, trying to call a top in this, and what about the volatility? Is the volatility telling you anything here that, maybe the buyers are trying to unload here, trying not to do it into weakness here? You think there's any key to the increase in volatility that may be signaling a short-term top?
Well, there's a lot of volatility in the financials, but, if you're talking the VIX overall, it's muted. I mean, we're down here at 12 on the VIX. It's been a slow, steady climb. There's no fear out there. I mean, there's more fear for not being in the market than there is to be in the market right now, if that makes any sense. And that's the case. There's just so much money that is on the sidelines that is fearful that they have missed their big buying opportunity, the consolidation from the last couple of years, and they want to be in. Americans making new all-time highs, S&P want to make new all-time highs. Coming towards the end of the year, there's fear of people losing their jobs, probably some of these money managers, if they're not, outperforming. It's been a difficult market. It's been a difficult trading environment here, and that's why there's so much money chasing stocks. And if I've learned anything in my 17-year career, I've learned that I do not make money chasing stocks. I make money. We've talked, with the analogy of the train station. Trying to, jump on a moving train is always dangerous. I like to wait till the train is at the station, and then, once it starts moving, or get on it, and then let it start moving. So, and that's what I mean is when you have a consolidation period, that's when your time is to strike and to make your call. But when stocks are just going up relentlessly, 25, 30% in a couple of weeks, it's hard because it could keep going, or they could pull the rug out from under you and the things could fall 7, 8, 10% a day. So I mean, as a scalper, as a short-term trader, maybe it's okay, but as a swing trader, difficult to be jumping into the financials in either direction here. It's because they're so hot right now. I don't want to short them, just like Nick says, but they're up 30%, so I don't want to buy them here either. So from a swing trading perspective, I'm completely almost on the sidelines. But now as a scalper, there's lots of nice little volatility to jump in and out of.
All right, looking at the dollar. Dollar got a nice boost here off that coming up. I'm looking at the dollar index here. The futures, I'm hitting 190, close to the 101 level. Been a nice strong rally here in the dollar. Major resistance, another buck away, but that would take a huge movement. Dennis, have we done anything here on the ratings so far today?
No, we haven't. Let's go check them out. There's a couple interesting ones. Here's a couple late to the party ones for you. Barclays getting upgrade at Jefferies. Thanks, Barclays. It's now, or thanks, Jefferies, because Barclays has ran up from $9 to $12. So it's up basically 33% here in the last month, and now you're upgrading it. Same thing, JP Morgan is upgrading Credit Suisse. Credit Suisse is up in the last 3 days. This thing went from $13 to almost $16. So this is chasing. I mean, this is your classic analyst just chasing price here now. They probably don't like the rating they had on it, so they want to clean it up. I'm not sure if they went to hold or where they went to, but that's difficult, to be chasing here now. So maybe we'll leave those alone. One of interest here is Fitbit. Fitbit is getting downgraded here this morning at Deutsche Bank. They're cutting the price target in half on the stock. It is now $8 where it's trading. So it's not really trading down here in the pre-market, but man, this Fitbit has had no love. So definitely not a Trump stock.
I want to add. I was gonna add to the Fitbit real quick. They just bought this company Pebble. They didn't buy the company, but they bought assets from the company, some IP, a couple of departments. And the Barclays analyst is saying that while that was a good move, he still sees like organic growth issues as like a natural concern. But it seems to be industry-wide considered a good move that Fitbit bought the assets that they did from Pebble.
So Deutsche Bank, it sounds bad, that they're having it, but it's more catch-up here as well because they had a buy on it. So they're obviously, probably embarrassed that they had a buy on the stock. And now, so they're cutting it to a hold, and they're cutting their price target from 18 to 9. So they still think it's going higher, I guess, because it's at 8 here right now. So it's not really that big of a downgrade when you compare it. It's more just playing catch-up as well. And you see this at the end of the year where analysts are playing catch-up with their price targets. When their price targets are completely out to lunch, they're doing some moves. They're moving the price targets. So at the end of the year, they don't look as bad. But this analyst is egg all over their face, obviously, because they're at a price target of 18 with a buy on, and the stock's at $8 now.
All right. Spencer, how about an update on your Fitbit?
It's great. I've had it for about a week. Battery has not died yet, so I haven't had to plug in at all. But it's been great. It's not waterproof, which I didn't realize when I bought it. So that's like the biggest.
Oh, why? Just stick it underwater?
No, I looked it up. I was like, I wonder if I can shower with it. And
I didn't realize. I was like, I took a shower with it.
No, can't shower with it.
Work.
That's the only hiccup, though. But no, it's great. And so far, so good in Fitbit land for me.
All right, and Angie Baby's mentioning Fitbit and Medtronic had an agreement for diabetes monitoring, so we'll keep an eye on that. Is that a triple upgrade in Lululemon, Dennis? Is that what?
Yeah.
Oh boy.
Yeah. Analysts chasing price all. It's basically all your upgrades and downgrades today are just analysts chasing price here this morning. So let's go look here at the Lulu. They are getting an upgrade to neutral from Bank America because they had to underperform on it, so they're obviously not liking that. They are getting an upgrade at Evercore. Evercore had a sell on it. They are upgrading all the way to buy. So they go from sell to buy. Thanks, Evercore. And the other one that you were talking about was Mizuho, and they were going from neutral to buy. So they weren't as bad. But the sell to buy, that seems ridiculous from Evercore. Anyways, Lululemon obviously trading up significantly here in the pre-market on their earnings report.
Wouldn't you love to be like a fly on the wall, like these, these analyst meetings, where they have to go in and they all have to talk? And do you think they just like hoot on each other? Like, are you kidding me? You're upgrading this. Why didn't you tell me yesterday? Lulu's hanging up here, Dennis, and $70. It's just, I don't know, where are the bids at in this thing? I mean, I'm looking at it, 70. I can tell you where the offers are. 69.75, the pre-market high. But man, where's the best bid there in Lulu? Like, if you decided you wanted to get out, is there a bid?
68.90. It's fairly tight right now. 68.90 to 69, 10 cents. It's traded 200,000 shares already too, and it's consolidated up here for a while now.
Yeah.
So it's tightening up. After the earnings report, this thing was $1 wide. So, if you were just trying to trade it after the earnings report, and that's the one thing to understand when you're trading these earnings events, they're difficult because if you're on the wrong side of it, you can lose 3-4 points in a hurry, and there's no out. You can say, okay, well, I'm going to short at 62. If it goes 63, I'm out. When you go 63 and the best offers is 65, you get 2 points of slippage in there. So, I mean, it's difficult to just, come into these earnings reports and start playing them. You got to wait till, there's turns, and there's a lot of strategy. I trade the earnings reports a lot. But there is a huge amount of slippage when you're trading something like that. And you have to account that into your strategy as well, that there's going to be slippage. 2 points of slippage, though, makes me not want to trade. And I think, now you see, 10 cents, you can get in and out. Now you can make a call. Train is at the station here. It's not, already moving and jumping on a moving train. So, from a short-term trading perspective, it's sitting here. So, it's up 9 points. From a swing trading perspective, I don't know. But short-term trading perspective, you've seen some consolidation here.
Now, coming out of the chat here from DC1, Blackstone Group, LP. We haven't talked about this one in a while. Here's a financial that's had a nice run here coming up on the big day yesterday. Holy
huge
man.
Day.
Yeah, huge day. So those on these kind of days, man, you like to see continued follow through. You went out 875 high, 857 close, trading up in the pre-market here. You just, you don't want to see this thing right on the day. I mean, not necessarily putting a stop right below the close, but you want to see it clear 29 and just keep on going. 30 could be a good level just because it's a, psychological level.
Yeah.
But keep an eye here on your April and May highs. Let's just call it like 29.50. You had a monthly high in March at 29.34 and in April at 29.60. So another 75 cents up, maybe found some resistance, but big bar yesterday, big breakout. If you got in on that one on the open, maybe a little bit of heat, but a really, really nice rally.
Yeah, huge rally there. Another stock that's just benefiting, obviously. And it was a buy everything market yesterday, like we were talking about it there. So stock that maybe hadn't gone up as far, even though you would say, obviously, it's a financial, but hasn't moved up like some of the traditional banks have. But it got a bid yesterday. And I mean, there was a lot of stocks that hadn't been moving that did catch bids yesterday. And there's people scrambling around trying to find a home for money on the sidelines, and stocks like this were attractive to them yesterday.
Washout here in Horizon Pharma must have had some bad data or something. I don't think it was earnings. Let me check my trusty Benzinga Pro here. Conference call said studies testing
Down huge.
Acidamine in cancer to continue as planned, but anyways, we got a spike down to 1460, back up at 1650. So we'll see if you can get back at that level. Are we seeing a halt here in LinkedIn?
I think this is about 10 minutes ago. I think it's halted right now. It's going to be delayed opening on news dissemination, I think is what's happening here.
Right.
Has this merger been approved here, Microsoft? I'm just trying to see if this merger.
Great question.
Huh. I wonder.
No, the EU is still looking at this. So I just looked, just through my timeline there. The EU is still looking at this merger here, so it's not official yet. So I don't know, maybe they've got an official, if this is going to become official here or not. But interesting, LinkedIn, so it was halted at 8:43, so it's been halted for 13 minutes here this morning, and they're waiting on news. So we'll find out what it is.
Out of the chat here by Apple, why are people still trading UWTI and DWTI? When are they supposed to be going off the board here? Are they? Do we have a date on that? It might be today. Isn't it?
Yeah, it's Friday, I think.
Friday.
Friday.
Okay. Yeah. Okay. Yeah. A couple days
There's
here.
probably options on them.
All right. And one more here before we wrap up the show. If you want to gamble on Russia, they just sold a huge block of state oil companies. So RSX, we haven't talked Russia here in a little bit. I mean, let's take a look at the chart for the. Do you ever trade the Russian ETF? Probably only when there's news.
It trades with oil. So one thing you look if you know Russia's big oil. So if you look and you put the RSX up on a chart against the USO or against some of your oil indexes, obviously you're going to see a strong correlation between the RSX and oil. So and oil's obviously come back nicely here over the course of the last couple of months. So RSX has been strong.
Yeah, 11 to 16, and then you had a long consolidation, and you embarked here from the $18 level. So I don't want to say another 4 or 5 point rally here would take you into 22. So if you trade in the Vanik Vectors Russia ETF. All right, only a minute here to go. Spencer, S&P futures. This is the December futures are trading up 275 at 39.50. I only got one number for you for the day, and that was yesterday's high of 22.41 and a quarter. Your pre-market high is there as well, so let's see if you can just continue to barrel to 2250, 2300, 2350, and we got to get Sean on soon. Sean Udall, remember his 2350 prediction, and we all laughed at him on several occasions. Kind of getting this call right here. But Spencer, let's wrap up the show.
Looking at tomorrow's show, we got Kenny Glick. He's the owner and creator of HitTheBid.com and a colorful character, we'll say. So looking forward to chatting with Kenny whenever we have him on. It's always a real fun time. So Kenny Glick tomorrow at 8:35. If you missed any part of today's show, including our chat with Tobias Carlisle, you can catch the whole thing right now on YouTube Live after we're done, and also the podcast goes to iTunes, SoundCloud, and Stitcher. If you want a free 2-week trial of Benzinga Pro, you can get it real easily. Just call us up at 313-723-2000 or go to pro.benzinga.com if you want anyone here, myself included, to walk you through a demo of how to use the platform. Joel can do it. If Joel can do it, anybody can do it. So Benzinga Pro, check it out there, pro.benzinga.com. All right, that's it for us today. So I hope everybody has had a good day so far. Hope you all have a good rest of your day, and we'll see you guys tomorrow.
Whether you're a short-term swing trader or a long-term investor, you need to check out Thinkorswim, brought to you by TD Ameritrade. There's a reason why Thinkorswim has been named the #1 trading platform, because it has it all. With Thinkorswim, you can trade stocks, options, futures, forex, and virtually every other type of order. Get notifications on mobile devices and interact with other traders in chat rooms. You can also use technical indicators and see the latest investing and trading education in Think Money magazine. If you want to keep up with the markets, you need Thinkorswim. To experience everything Thinkorswim has to offer, open a TD Ameritrade account today. Thinkorswim, the online trading platform for traders and investors. TD Ameritrade, member SIPC. All investing involves risks.